Welcome to Envisioned Broadcasting, the station designed to encourage, equip, and empower you for growth and success. Presents Women Emerge with Mellisa Lambert, a show that shines a light on spiritual growth, health, purpose, and financial education. It's time to emerge and begin to live out your dreams, walk into your destiny, while making a difference in the lives of many.
Welcome to Women Emerge with Mellisa Lambert. I am your host, and we do still have our co-host coming on today, Mr. Tony Chambly. Just want to remind you today the show is being sponsored by Lambert Legacy Financial, powered by Core Financial Partners. We aim to teach the truth about money, engaging individuals and families to think about and plan their legacy. Our focus is our family, fun, and future legacy. This show will introduce you to leaders, experts, and motivators who share their journeys and their stories through personal and professional growth, knowledgeable tips, and lesson learned that will empower you to grow. It is time, y'all. We're about to grow. We're about to grow our mind, our spirit, our brand, our business, and yes, truly our finances. When I tell you this topic is really fire, I was so excited when Tony brought this to my attention and we decided to have this great conversation about this topic because we all, those who have been in the corporate world, those who have been in jobs, you know, one of the things there's couple of things that they kind of throw at us right away is a 401k as well as, you know, term insurance, which is group insurance on the job. So we're going to talk about employee sponsor life insurance. But before Mr. Tony Chambly comes on, I really kind of got into the understanding of what this is all. Like, how did this come about? So I'm kind of going to give you a quick history. And Tony, y'all, he is the expert, so he's going to kind of elaborate more on this topic, employee sponsor life insurance. So how did it literally originate? When you think about it, it goes all the way back in the 19th and early 20th century. The industrial revolution transformed the workplace with growing numbers of employees working in factories or even in offices. Employers began to seek out ways to attract and retain workers in a competitive labor market. So what they did was they looked into insurance. So insurance companies then recognized the potential for offering policies to group of employees, reducing administrative costs and spreading risk among a larger pool. So they figured it out in the 19th to the 20th century, and the first group life insurance policy in the United States was issued in 1911, y'all, by the Equitable Life Assurance Society to a group of employees at a Panaston leather company. So a leather company was the first company in 1911 to actually have a group insurance policy. And this then expanded, y'all, even into the Great Depression in 1930. The economic challenges of the Great Depression led to increased demand for financial security. So employers actually use group life insurance as a low-cost benefit to support employees and their family during the time of financial uncertainty. So even in the Great Depression around 1930s, they saw the need to really utilize life insurance to really help their employees and families during a hard financial time, turn within the Great Depression. And then when you think about the post-war, which is World War II, at that time, after World War II, employer-sponsored life insurance became more widespread as business experienced economic growth and labor union advocate for better employee benefits. So union then began to play a part into this concept of group life insurance as part of employee contract, and really getting together like benefit packages to help with the employees. And then later on in mid-20th century, you find by 1960 to 1970, employer-sponsored life insurance was firmly established as a core component of employee benefit packages. So it became a competitive tool that was used to attract and retain talented people, and also diversify the industry, to be exact. So later on down, you find that, when I think about now, focus on employee wellness. Companies are increasingly trying life insurance benefits to broader wellness programs, emphasizing the importance of overall financial health. And when you think about post-pandemic awareness, like the COVID-19 pandemic, right, that highlighted the importance of life insurance, even in that state of mind, right, leading many employers to expand or enhance their offerings due to the fact at that time in COVID, a lot of people were passing away, and many of them wasn't covered with any type of coverage at all, right? So employer-sponsored life insurance has transitioned from a noble benefit to a standard component of employment packages, reflecting changes in the economy condition, society type of change, expectation, and even the workforce needs that was actually increased, right? So as we kind of really dig deeper into this, I really know that Mr. Chambly, Tony is going to come on and really talk more in details about really how this employee-sponsored life insurance actually is and how that works. I just wanted to give you some kind of history on what that looks like. So, Tony, when we talk about employee-sponsored life insurance policy, what is employee-sponsored life insurance?
Yeah, employee sponsor. Oh, first off, good day, Miss Mellisa. Good speaking with you again and being on this platform again. I'm always enjoying myself when I'm here speaking about what we are so passionate about, and that's the overall financial education that we all deserve. So, in saying that, thanks for sharing the history of it. Employee-sponsored life insurance is all about getting a position at a job, and that particular job from that employer, as you mentioned, is an incentive to be able to be a part of a group purchase that the employer has put together with particular conglomerates, and when it comes to the insurance industry. And what happens is it's a huge benefit, Mellisa, when it comes to someone that's uninsurable. Uninsurable means that their health is in a situation that they traditionally and normally wouldn't be able to get life insurance because of whatever illness that's taken place. Well, with group insurance, it allows you not to be penalized for that. Everybody qualifies for group insurance, and the employer has to have a certain amount of employees to be on it. A high ratio of employees that come through the door has to be on it in order for it to go through and be accepted from the insurance carrier. So in most cases they do. They have well more than enough. And so that allows them to say, okay, we won't do an exam on anybody and won't ask any medical questions or anything like that, because everybody across the board is going to be covered. And so what is it? It's an opportunity for the employer to attract the best of the best, and it allows the employee to be able to find the best opportunity for themselves. It's an added benefit. Very few companies add as a friend's benefit. A friend's benefit means that they're going to pay for it. They normally have you opt in on the annual basis from enrollment. So to narrow down, sponsored employer life insurance is a group purchase that's happening from the employer, and allows everyone across the board to automatically be approved, and it allows you to get it in the forefront at a discounted rate. We'll talk about that throughout this discussion, but that's what it is, and it's some pros and cons to it as we speak about this as well.
Wow. And I like how you mentioned that those two components that I hear when you say, it actually allows everyone to be approved, right? And the other thing I like when I hear you say that is now knowing that it's also a group benefit. So it's an add-on benefit. It's an annual basis kind of thing. It's a group purchase happening from the employer to the employee, which gives opportunity for everyone, even those who are uninsurable, because for those people that cannot get any type of insurance, that group benefit, in a sense, help them in that level. So when we think about just the continuation of this conversation, what type of life insurance do employees use? Because, we do know we have different, we have whole, we have term, IULs, we have all these different policies. But when it comes to the group insurance, what are these employees giving those people that are coming on board and getting these add-on benefits?
Sure, great question. These type of policies is actually term policies, but it's a certain kind of term, and it's called annual renewable term. So it's a plus and a minus to that. It's a pros and cons to having an annual renewable term. Most people, when they buy term, Mellisa, they buy it for a pocket of 10, 15, 20, even up to 30 years, right? So your premium stays level over that 10, 15, 20, or 30 years. But when it comes to annual renewable term, it doesn't work that way. Annual renewable term is where you're going to be repriced every single year. And as you are doing your enrollment at your employer, at your job, it's going to increase every year as well. That's why they do enrollment every year. It changes every single year. So as you're getting older, you're going to pay more based off of that as well. So that, to me, is the con. The pros is that you're automatically going to be approved, right? Everybody automatically. And it's the cheapest term you can buy. However, it gets more expensive as long as you keep. The longer you keep it, the longer you're at your job, the more it becomes expensive, to the point it is it's a crossover where you're paying more from your employer giving it to you than you would if you would have had it yourself. So that's the con to it. So hopefully that's helpful to anybody. If you wonder what kind you have, if you work on a job or you have an employer that's offering this and you're doing it, that's, to me, important for information that I believe everybody that's taking this and accepting this from their job to be able to know. It's annual renewable term.
I didn't know that, and I just thought it was just term alone. But I remember when I was on my job, I remember when we did the year later, they did give us an email saying that we have to go into the system and kind of accept again the term of the insurance that I was purchasing through them. But I didn't even think about it at that time. That is actually was annual renewable term. And one of the things that you said that really piqued my interest, and I want people to understand this. You said, and I may not be quoting you the right way, yes, it's the cheapest term to get, but more expensive the longer you keep it, or the longer you're at your job, and your age also increase it as well. Then you said something that, I think we all need to remember and hear this. You pay more compared to if you had it on your own.
That's right.
That part right there, if you can just elaborate on that for me, because I think people need to get that, because they feel like they have a safe blanket because they are like covered by their job per se, not realizing as they age and they continue to grow into their job, it's great to have it, but then don't forget that it's going to increase. But if I had it on my own individually by myself, through a corpreneur or through a corpreneur, it will be a less cost. So can you just elaborate a little bit on that for us?
Sure. Out of the different types of term, right, the longer the term is, from 30 years on down, some companies even do longer than a 30-year term, right? That you can get a 20-year term. You can get a 15, 10-year term. Well, the longer the term is, the longer they're on the hook of having to pay the death benefit out if someone transitions, right? So it becomes more expensive the longer years. Well, out of 10, 15, 20, and 30 years, Mellisa, the 10-year term for, let's say, for $100,000, it's going to be a lot more than a 15-year term. And a 20-year term is going to be more than a 15-year term. It becomes more expensive the longer you're covered at that level price, that level amount. Now, if that's the case, that means 1 year annual renewable term is even cheaper. It can't get any cheaper than that. And so now the insurance company know they only hook for every individual for 1 year. And statistics show, Mellisa, that out of all the term policies that are owned across the board in our country, less than 2% is being paid out. So they know they're going to win, right? And so here it is where we're renting something versus owning something. Here it is we're pouring into something that gives no equity back as a renter versus the owner. And that's where, even outside of your employer, I would, suggest to have a plan and a strategy that is going to eventually get you away from term, period. But I know we all get started at a certain point in life. We need term until we build up our wealth or build up our, portfolio. So to get back to the answer to the question is that annual renewable term is the least expensive, but as you get older, it gets more expensive. And there is a cost in the bridge where you're going to be at a certain point where you're paying way more than you would have paid on your own, right? And plus, I believe the most efficient you can be is to have a permanent policy as well, right? Maybe even a hybrid policy, and they don't offer that. I haven't seen a company, if there is one out there, it's very far in between, that offer something more permanent, because permanent is like owning versus renting. You're building equity in every dollar you're putting into it. So it becomes more expensive because those dollars are gone and gone forever. We have lost opportunity costs on every dollar that we're putting into any sort or type of term. But yet it is needed, though, for some families that are young kids, and the breadwinner matters. So I don't knock it. To me, this is how we have to look at it, Mellisa. We have to look at our employer-sponsored insurance policies as gravy, right? Not to our entree. It has to be gravy, right? Because it's not a either or. It's in addition, right? It's the icing on the cake, right? You should have a foundation on your own that you control, and that is long-term for you and your family for generations to come. That the employer is not going to offer that.
I agree. And this goes right into our question that we're about to share, because the reason why, again, you're tuned into Women Emerge with Mellisa Lambert with my co-host, Tony Chambly, the CEO and the visionary of Core Financial Partners. And we're talking about employee sponsor life insurance. And I think that this topic is so important because many of us are working. Many of us have a job, a 9 to 5 or 9 to 6 or whatever job hours you have decided to be employed by someone else, which is now your employer. And on this job, they give you an opportunity to get life insurance, which we now know is as a group insurance. And as Tony just shared with us, it is a term policy, but it's an annual renewal policy. I want you to be aware of what you have, right? And that is the reason why this show exists, for us to be in the know. And we always say, Tony always say, once you know this information, we don't want you to just keep it a secret for yourself. We want you to activate, use the information, get back with a corepreneur, get back with someone like myself or Tony, and let us help you to really transition yourself to be able to have a control policy, which we now know as an infinite banking concept policy, which we now use through whole life policy with our company. So I know for a fact that this is something that's needed for us to all hear, but I need people to understand this part. This question is very crucial. Is the employer offered life insurance transferable? Because again, anything can happen, Tony. I can go into work today and they'd be like, oh, unfortunately, we're downsizing and you're one that has to be let go. And I've been paying into this policy for the last 15 years or whatever, 10 years. And now I never had anything on the side for myself, never had a whole lot policy, never even had a term. Personally, I only had this group insurance. Can you tell me now, if something happened at this job and I had to leave this job, can I transfer this this term policy, which is a renewable policy on this job, can I transfer that? Can it be transferable? Can I say that?
In most cases, in just about every case I've seen, there might be a couple of them out there. I can't say for a solid no. I can say that for most, no, it's not transferable. And let's clarify what transferable is. Transferable means that when you leave the job based off of your voluntarily leaving or you're forced to leave, and voluntarily means you have decided to retire or quit. Forcefully means you fired or terminated. Either way, I would say vast majority is not transferable. You cannot take it with you. You have to start all over. You have to go by your age you're at then, and then hopefully you're insurable, meaning your health hasn't deteriorated at all. Sometimes we could be walking around looking healthy, and most people find out their health situations when they apply for life insurance, believe it or not. Hopefully that doesn't, make anybody.
Isn't that crazy, though?
I know, that's crazy. I have a multitude of situations where we have clients that didn't know anything was going on. But guess what? It has saved people's lives, Mellisa. It has saved people's lives. They are very thorough on their, dissecting and doing blood work and looking deep into someone's possibility of living for a long time. That's the business they in. And so, and getting back to the point here is that if you have any of those happen, leave voluntarily or forcefully, is not, in most cases, I haven't seen it yet, not saying it's not out there, it's not transferable. You cannot take it with you. You have to start all over again and start from where you are at that time in your life, that age in your life. And some of us have careers, Mellisa. Some people have been at their job and they depended on that the whole time. And that is, I don't suggest that at all. It should be, once again, it should be gravy. It should be icing on the cake. It should be an addition, right? Your foundation should be in your control. It should be in your portfolio, and you can do what you want to do with it when you want to do it. When you want something to be done.
Wow. And again, that right there, you said a word inside of your sentence, control. If you don't have control of that, that's the problem there. And then when you think about it, no job is certain. You can go in today and walk out the door, and then tomorrow come back, they're like, well, we're closing a door. So you have to think outside of the job and think, what is best for myself? What is best for my family? If, God forbid, anything will happen to me at this job, do I have something that was set up for myself for tomorrow? Not only that, like as we age, the age also dictate on what type of, how much insurance we can get, right? It changed by our ages and by our health issue as well. So we got to really, really prepare to not just say, let's leave it into the hands of our employers. We got to prepare to say, you know what, I want to have control of something that is permanent for my life, permanent for my family. So that's why I love when we talk about this information, why we are keeping people in the know, because society tells us, get this group insurance and that's it. Not realizing, no, that is not it. Yes, we're not saying to not receive it because it's an extra, in policy, but we're saying outside of the work, let's see what we can do to make sure your family's protected. God forbid anything happen while you, with that job that you, basically have right now. So, Tony, when you think about just this, again, we're talking about employee-sponsored life insurance policy. Do the sponsor employee plan offers enough protection? Like, we know for a fact what protection we normally do. We normally do a whole and a term with our clients, the way we set our policy up. But when we're talking about, a employee sponsor life insurance policy, how much can you say a person can have? How much is the offer when it comes to their protection plan?
What I'm seeing across the board is about 2 to 3 times their income. So 2 to 3 times the income is the norm, right? Not saying there's no exceptions. So in saying that, when we're doing financial planning at Core Financial Partners, our corepreneurs are knowing we start at 10 times your income. Because you got to think of it like this. If you are the man or woman of your household and you're one of the breadwinners or you're the breadwinner, and you let's say you make $100,000 a year, and you're the breadwinner, that means most income comes from you, or it's not all, and God forbid you transition, you pass away, you move on, right? And you only have 2 to 3 times your income that is going to be paid out, and yet your family still has a lifestyle to maintain. You have kids, you have a spouse or significant other, you have responsibilities that need to be handled, right? The way they travel, the way they go to school, everything is now on that family, less the income that was coming in. How long is that going to last?
Not long at all.
Most people, Mellisa, end up transitioning out of that lifestyle, and I'm talking three to 4 levels lower than where they were. Some people have to go live with family. Some people can't even sustain it at all because of the minimum coverage and protection that was put in place. As a responsible adult that brings in a part of the income, right, on an annual basis, right? A responsible adult has to think at least 10 years out. Have to.
Yeah.
Have to. Minimum. That's minimum. That's where we start, because we do formulas according to one's situation. Everybody's different, right? We do true evaluation. We do a financial stress test, right? And to me, 2 to 3 times somebody's income, it most likely that's going to be gone in 1 year, right? Because all the things you got to take care of the arrangements, the family, everybody's reaching out now, and it normally doesn't even last a year and a half. So my high suggestion on this subject right here is make it an add-on, not an or. Make it an add-on, not an or. Get your foundation in control that you're controlling, and make sure you're working with individuals that have your best interest in mind, right? And that you're getting at least 10 times your income, even if you're retired and you have a spouse, right? So the most you can do is if that's the most you can do, a little bit under, at least you gave it the effort to get as much as you can, because age matter on how much you can times your income. And the older you get, the less times your income you can qualify for, or your net worth. So that's a whole nother talk for another day. But most employers do not offer nowhere near what most people should have when it comes to how many times they can do their income.
Wow. And you were the first person that I ever learned this from, the personal insurance, which is the income replacement, chart. And when I look at my age at 43, I need to have 25 times my income. And I was like, just when you think about it, just thinking about it, like Chelsea's 12. God forbid anything happened to me, and I put on my pops, put my 25 times my income. At least I know 25 years from now, at least she have enough of whatever I kind of put in place for her for the rest of the time spent of the 25 years. And I like that we we give our clients that option to not just think about 2 times their income, 3 times their income, but let's think long term. Let's think 10 years. Let's think 25. Let's think 30. So you can now prepare not just for the next 5 years, but for a good time for your family to be comfortable in their living situation. So I appreciate you even sharing that even with me, for me to get an understanding of how this works. I can set myself up for my daughter's generations to come. So, and again, you're tuned into Women Emerge with Mellisa Lambert. This show is being sponsored by Lambert Legacy Financial, and we are dedicated to bringing financial awareness to the community through financial education, through the infinite banking concept, and we teach the truth about money, empowering individuals to think about and plan their legacy. Our vision is to become a beacon of financial educators that transform the lives of so many people by giving them this knowledge. You know, one thing I love about Tony Chambly is like he's not afraid to share this information. I've always said in the beginning and also now that he is my expert. He's my mentor, my teacher in this industry, and it's always an honor to be able to grace a platform with him and also to be a part of this amazing company, Core Financial Partners. So we are actually here talking with our co-host, Tony Chambly. We're talking about employee sponsor life insurance. And if you're just joining us, please go back and listen to it. Tony did talk in the earlier beginning. He answered what is employee sponsor life insurance. He then gave us some answers to what type of life insurance do employees use. He then gave us some information about is it transferable or not, because we need to know this information. And we just finished talking about do the sponsor employee plan offers enough protection? And we just said, more likely they offer 2 to 3 times, but we want to think at least 10 times your income, the least 10 times your income. So, Tony, I'm going to ask you this other question just to kind of get some more clarity. Does these policies offer any type of savings or cash value? Because we want people to not just protect themselves for death purposes, but we want to be able to show them how they can not only do that, but we say 3 in 1: have a saving, have dividends coming through that policy, and also having a life insurance policy with that one, with everything. So with the group insurance that is given to them from their employer, do they have access to, say, get dividends, to get a saving, or even have a cash value at all?
Unfortunately, I haven't seen it yet. I've never seen one that's convertible to a policy that can do that, or that even starts off that way. They normally start off with term in this annual renewable term, which does not build up any cash or savings inside of it. Because if it was out there, Mellisa, not only would I know about it, I'll be putting in my application to work there too. At least I would have some years ago. I'd be like, okay, y'all doing that? Okay, add me in, right? Put me on, set me up here. But no, it's unfortunately it is not. It's pure, annual renewable term, and that doesn't allow you to build any savings or cash value in it, and it's also in a position where it's not going to ever be able to do that, because I haven't seen any that allow you to convert it into that either. And so right there alone, that's something you want to consider, because if you had those same dollars going after a term outside of that you control, most term policies, well, I'm not going to say most, a lot of different term policies out there. That's where you want to talk to a consultant, because we can make sure you properly set up. If you're going to get a term outside of your job, get the proper one. Get one that is able to be convertible, right? Convertible means that even though it's a term policy, whether it's 10, 20, or 30-year term, before the term runs out, you have an opportunity to convert it to permanent, and without any proof of insurability. Meaning you don't have to worry about any type of medical exam happening for them to, give you the thumbs up that they will cover you. you don't have to worry about that. It's automatic coverage when you have a convertible term. And in these policies, it doesn't allow you to do that. So if you had a choice and the dollars are a little slightly off, even if that one's a little bit less expensive, I would still consider doing my own term so that I know that eventually I can build equity in it, which is savings and cash value when I convert it, right? And not worry about, God forbid, something happens to me that I can't foresee, that and I get denied or declined, and that's happening. It happens quite a bit, more than I would like to see, and that's where I see the value in just having the employer run as an addition, as gravy, right, as icing on the cake, not the meat and potatoes, not being the cake.
I love that. I love that. And you know what's so crazy, Tony? I was talking to Janice yesterday, and we're talking about, she said, so Mellisa, what about those people that can't afford it? I said, the first thing I would ask a person that says they can't afford it, my first question to them would say, let me ask you a question. How much money do you normally save and put in your savings account every single month? Because traditionally, they tell us to get a checking account and a savings account. That's what the bank tells us, right? So I will ask that first question because more likely they're saving some form of money, putting aside something every single month. And give or take between $100 to $300, you see the average individual saving on a monthly basis. What if I can show you that same savings that you're doing traditionally, and now let's put that same $300 that you're saving on a monthly basis in a traditional account that's not giving you no insurance. It's not even giving you enough dividend to say it's increasing and seeing tremendous growth. What if I could just show you how to do that and put it in where you're still putting $150 towards your life insurance, putting $150 away in saving, and you're now seeing a growth in your insurance, with your $300 money. And Tony, that's what CORE does. That's what we do. That's what we teach our clients, to really see money in a different way. And I like what you always say whenever you do the presentation. If I can show you how to find this money and close up those holes that's in those buckets, will you save it?
That's right.
There's money to be found, Tony. I really believe we have what we need to put aside for our future family, for our future. But it's just like, it's so sad to say this. It's like we spend money on, like, what do you always say? Unknowingly and unnecessarily. How do you say, Tony?
Yeah, we're normally having our monies normally it's our money is going away from us unknowingly and unnecessarily by the way we spend money, the way we take care of our needs, wants, and desires is what I normally say. Yeah.
Yes.
Yeah. Let me add to that real quick. When it comes to affordability, I believe affordability is a mentality. I really believe that. I believe
say that again, Tony. Please.
Yeah, I believe affordability is a mentality, and I believe that because I believe people that have low income to high income always buy what they want, even before what they need. Right? I mean, we've been in businesses, Mellisa. I've seen people with very low means come up with money for products and services, or travel, right? Or to join something, or to be a part of something, right? Or for entertainment. So it's a mentality. It's it's really, where is it in on your priority list to take care of yourself and protect your family? That's what it comes down to, right? That's what it comes down to. And I believe, and I say mentality is this, and I'm not here and being out of touch, right? Been there, done that. Got to have the T-shirt when it comes to struggles, financial struggles. However, though, when you want something and you have the right mentality, you find a way to make it happen. I hear you say it all the time, Mellisa. When something is needed or something's coming up that I have to take care of for me and Chelsea, It's going to happen, right? It's a mentality. It's
a
going to happen.
mentality.
Once we're convinced that you cannot live without something because it makes the difference of getting closer to your Independence Day, you make it happen.
Yeah.
You make it happen. Period. You make it happen. So it comes down to, how do we prioritize? How do we view your future income, right? Because you think about it, and I know this because this is my mentality. My mentality is, I know that I play a huge part in not just my own household, Mellisa. I do a lot for people I care about and love, right? So
yes, you do.
So I think past even my own household. If something happened to me today, where are they going to be, right? Where how are they going to be living, right? And that's where I think I have to think. I look at my age, I look at my life expectancy. That's, by the way, 100 plus, and I say, look, okay, is that being taken care of if God decides to take me and be with Him tomorrow? Today, is that taken care of? Is the future wealth of my family and my loved ones taken care of today? And the thing about it is minuscule to what it takes to do that. To guarantee Chelsea's going to be okay all the way through 30 years old, at least when she's out of school, she's got a career going. It is minuscule what it takes for you to take care of that situation for her.
True,
right?
So true.
And that's what everybody has. That's a mentality. It's just a mentality. We have to think, like Nelson Nash says, we have to think 3 to 4 generations out when we're building a legacy.
Amen.
Right? What you do for yourself dies with you. What you do for others live on forever. And that's where we cannot be thinking, okay, my job insurance is enough. That's an add-on. That's icing on a cake. That's, thank you. I'm grateful that they offer it to me and I can have it without any insurability being checked out, right? And here's another thing I want to say to somebody that's uninsurable right now. Find a job that's going to offer this to you. If you're in a position where you can still work but you're uninsurable, if you have an option between job A, B, or C, find a job that's going to offer this to you because I think it's a great benefit. I just don't think it should be the only way to cover and protect your family. It is a great – because I know people that they're uninsurable right now, Mellisa. And for me, if I was them, because I go over how important this is to me. That's why I'm in this industry, because I know the importance of taking care tomorrow, today, right? And so somebody's under the sound of my voice. It just come to me to say this. Somebody is in that position. You're uninsurable, but yet you want to make sure your family's okay. There's plenty of jobs out there that will allow you, that will hire you with your skill set and give you this benefit, and they do not test you. You do not have an examination to get approved or declined. So keep that in mind for who it might be one person that might be needing to hear that. But it was in my mind to say that somebody, you might even have a job already that don't offer it, and you have a skill set that you can go look for something that is going to offer that. Because now we're valuing who we are, who giving me the most and the best benefit, not just the dollars. Sometimes they give you money and don't give you benefits. And you might be in more need for benefits than a slightly less amount of dollars. Slightly more amount of dollars. So it's just thinking a layer deeper about our money, thinking a layer deeper about our future, and protection. Protection is number one, right? Yeah, we help people save money, we help people do this, that, and the other, but to protect it all is important. That's number one to me. You want to build something, and yet it fall all down because of one decision.
I love it. Tony, I really believe that this conversation is necessary because we want to be sure that you are in the know. It's okay. Like, I mean, again, for everyone, today is Thanksgiving. Happy Thanksgiving to each and every one of you that's listening and tuning into this podcast. And even sitting at the table, Tony, I want to kind of leave out with this. We're going to be dining with our family this today. We're going to spend some quality time this weekend with our family. We're going to go to this thing called Black Friday and Cyber Monday. We're going to spend our money's going to be away from us and not making no money for us, okay? Let me just drop that right there. But as we, as we really kind of sit around this table, as we partake in these foods, and we're sitting down, this is a topic that we need to talk about. I really feel that we are so afraid of death. We are afraid to talk about, what life expectancy is, what do you have, what you don't have. This is a conversation as families, Tony, and I'm so passionate about this because regardless of the matter, I heard there's this guy that's out here. I don't even know what's his name. I was at an appointment yesterday, and this lady was like, can you believe this man is trying to reverse back his age? He wants to be back in his 20s. And I said, he can reverse all he wants, but guess what? Death is going to knock at his door regardless of how much he reverses it back, right? That is something that is promised to us, to be in this earth, on this earth, to come in and to go right back out. But we have, as families, as we sit and laugh and eat and, watch these things, we got to have these serious conversations.
I'm sorry.
You watching football? Who's playing, Tony? Who's going to be playing?
Detroit and Chicago.
Okay.
Yeah.
So who are you rooting for? Who are you rooting for?
Oh, no, actually, it's like 3 or 4 games. New York Giants is playing Dallas Cowboys. So it's a day of football as well, Mellisa. But go ahead. I'm sorry.
I know you're not going. I know you're not going to want Dallas to win, so we're going to cross Dallas out. Okay. So we're going to be watching the football game. We're going to be hanging out. We're going to be playing some cards. We're going to be doing whatever. Half the conversation, do you have life insurance? Do you have you heard of Core Financial Partners? Have you heard of Lambert Legacy Financial? Have you heard of Infinite Banking Concept? If not, we got somebody to talk to you about this information. Do you know that you can actually allow your money to work for you and not you work for it? Have you heard that you can become your own bank? Have you heard that you can actually have a saving and also dividends paid out, increasing your money as well as life insurance in the process of paying this one same money that you put in your savings account? Have you heard? We need to have this conversation because if we're not having these conversations, we are opening the door to leave our family with nothing, Tony, nothing. And it's sad to see I'm going to speak of my own race. Now, we would like to pass the plate, collect the offerings, collect the GoFundMe, not realizing this is one opportunity for you to pay something as small as $150 a month to get $100,000 coverage. Come on now. Where else can you literally spend $150 a month, right, to get such amount of coverage? I'm just giving you an example. May not be the one. I'm just giving you an example. You have I don't know what do we call it, Tony, when you're paying for something low and you're getting something high? What is that called in the insurance industry?
Paying something low and getting something high.
Yeah, paying a small premium, but you get a big payout, which is a life insurance policy. You pay only a small premium, but you get in a high cost and premium.
It's not coming to me, Mellisa.
You know what happened? When I passed the test, that was one of the questions, Tony, and I totally forgot. Y'all, listen, that test was a bit challenging, but that's one thing I remember. They call it where you pay something, the insurance, you're paying a low cost in insurance, which is the premium is so low, but then your outcome is a high. You're getting a high ticket cost. If God forbid you pay, I'm paying $150 today, and 60 days from now, God take me home. Guess what? My daughter will be left with $250,000 in life insurance, but all I paid in the last 60 days was only $300.
Yep.
So
it is a name for that. It's just escaping me right now. I know what you're talking about.
Yeah, but
and it does work that way.
Either.
By the way, it does work that way. Somebody can make one premium payment, and they transition. That family's still getting 100% of that death benefit tax-free.
Just from that one payment, that $150 or $100 to $200, that $500 you paid, just that one payment, just in case anything happened, that $500,000, that $300,000 policy, whatever that amount of premium coverage, the coverage you have on that from that policy, your family's gonna be paid out on it. That makes sense. I always say, if it don't make no sense, it can't make no dollars. This is what makes sense to us. So, Tony, as we kind of finish up and we were wrapping up, and we're now in the season of, this is Thanksgiving today. So, what can you leave with us as we're taking this time and we're breaking bread with our family, and we're talking about today employee-sponsored life insurance? What can you leave with our audience so they can really summarize this up to kind of say, okay, you know what? I need to reach out to Tony. I need to reach out to Mellisa, or I need to reach out to a corepreneur because I'm ready to transition myself to having my own policy outside of my family. What can you leave with us today to remember how important this is for us to transition to get our own policy outside of our employees?
Sure,
employers?
Absolutely. What comes to mind for me is don't try to figure it all by yourself. You have a firm, a certified IBC, Infinite Banking Concept firm. We're certified. We're authorized. We have multitude of practitioners in our firm. We have well-trained consultants. And you want to make sure that you're not trying to figure out, am I in the right product right now? Am I in the right policy right now? Do I have all of my affairs in order? Am I avoiding all of this estate taxes that everybody's going to embark upon if they don't have proper planning in place, right? And remember, at CORE, we're of the belief that we're rather help find the unnecessary losses that are incurring in most people's personal economy than finding a winning investment, right? We do that second, right? What good is it to make money and you're losing more money on the other end by the way you pay out debt? And there's many other layers to this. I just encourage you, don't do this by yourself. If I can do this all over again, this whole thing, and go back 20 years from now and start over 30 years from now for me, and start over from there with a consultant that gives and shares this type of information and become a resource, could have become a resource to me, I would have did it all day long. I would have really been very thankful that it's available and that someone is willing to walk me through this process side by side with me, versus me trying to figure this out, trying to get through all of the trickeries that is going on in the financial industry. It's meant for us to be confused, and we've cleaned all that up. So get with whoever asks you to listen to this and just get some of the fundamentals down, and then it's going to carry you through. It's going to do it's going to give you an amazing view of not just your generation you're in right now, the next 3 to 4 generations.
Wow, that's amazing. So how do we follow back up with CORE Financial Partners? I will give my links at the end of it, but how do we connect back with learning more about CORE, watching some of these information so they can be more informed, reading some of these books so they can be informed? So tell us, how can we really get information on just the process of CORE Financial Partners, but also how to connect back with a corepreneur?
Sure, absolutely. You can go to learnmorewithcore.com, learnmorewithcore, CORE.com, and there's a video archive there with a video series of, we're up to like 15 or so videos, but each one is only a couple minutes long. So watch those and get more familiar with different financial concepts. Also, go over to CoreReads.com. CoreReads.com is the suggested book list right there, right? There's books on becoming your own banker. There's books on your path to financial peace of mind, right? That book right there, those 2 books right there are the first 2 on there for a reason. Go grab those 2 books and dive into them. Both of them each one could be read on a weekend by itself, right? They're not long books, and they're not complicated at all. Then, if you're a person that aspires to get out of debt, in any way, even get your mortgage paid off in a fraction of the time it normally would take, you want to go to coredebtstrategy.com, coredebtstrategy.com, and then you have a video right there to watch that's going to change your life. If you have any sort of debt that you are trying to be most efficient with, because you can recapture every dollar you're spending on your debt. That video is going to explain how you can use the infinite banking concept in that way. And last but not least, our general website is corefinancialpartners with the S.com, corefinancialpartners.com, and everything's on there. And get with the person, though, most important. Your number one resource is that person that gave you this podcast to listen to, whether it's Mellisa, myself, or any other of our consultants. Please follow up and get back with them. They have the know-how. They have the resources that is not even all on the website. So thank you once again, Mellisa, for inviting me to be a part of this conversation. I am definitely gleaming from this, as always.
Oh, wow. Thank you. Thank you so much for always being present and open and willing to share with us the knowledge that you're learning, because you are every day. What I love about Tony is always learning, and he's never afraid to say, I am always learning, y'all. I'm learning something new every day. And whatever he learns, he's never the type of person to hold it hostage. He wants to make sure he learns this and share this with so many people he likes, love, and trust. So thank you so much, Tony, for just being a co-host and always being here presently every Thursday to tell us the truth about money. So again, if you are ready, Tony already told you about how to connect with the corporate. You know, one of the things that we have done every Thursday, we've been on this thing together. Even in September. September was Life Insurance Awareness Month, and every Thursday Tony was on there faithfully. And since September to October to even now, every Thursday you would hear Tony, and we are here talking about the truth about money. So we do have it listed on all 13 top podcasts, including our YouTube channel, which is Women Emerge Network. Go there, listen to the different episodes. I promise you, every time you hear something, you're going to pick up something totally different every single time. So definitely do that. Also, you can schedule some time on my calendar, Coach Mellisa. That's Coach and an Mellisa.com. You can go even directly to my core website under Lambert Legacy Financial.com and book a time with me so I can help you. Tony is my mentor, so he's always going to be the one to help me with you. So I'm not doing it by myself. I'm doing it with Tony Chambly. He's always there for me to help me give you guidance to get you to the best financial place that you need to be. You can continue to follow us on the same podcast every Wednesday at 5 p.m. Eastern Standard Time, every Thursday at 6 p.m. Eastern Standard Time at WomenEmergeRadio.com. On Facebook, I am at Mellisa S. Lambert. That's Mellisa S. Lambert. On Facebook at Lambert Legacy Financial, as well as you can definitely keep on tuning into us. And we truly believe that this information should not be kept a secret. Tony always says it. Don't keep us a secret. So thank you for tuning in to Women Emerge with Mellisa Lambert. If, again, you found that this episode was helpful, please don't keep us a secret. Share this with someone you like, love, and trust, because many of y'all is still on a job. Y'all still are employed by somebody, and we want to make sure that you are not only just leaving your life faith in someone else's hand, but you are taking what we said earlier, control, and utilizing a system that we're going to teach you here at CORE, which is becoming your own bank. So, Tony, I think that's it. We kind of wrapping it up now. Happy Thanksgiving, Tony, to you and Latoya and the whole CORE family.
Yes, happy Thanksgiving to you as well, and everyone out there. Enjoy this day and be grateful, and we all know that we're blessed, and I am excited, and I look forward to what's to come.
Amen. And just while you just said that word grateful, I know that when we sit around a table, we always say what we're grateful for. So I'm going to speak out loud today. I am so thankful and I'm so grateful for you, Tony and Latoya Chambly. It's an honor to be able to be in your presence. It's an honor to be able to serve you truly on purpose. And it's an honor to work alongside you and Toya and the corpreneurs on this journey to really bring forth a crusade around the United States and to be able to share with people the truth about money and teaching them how they can become their own bank through the infinite banking concept. So thank you. I am so thankful for the Chamblys as well as our corpreneurs who is on this crusade to change so many people's financial life. So thank you, Tony, for just all that you do for not only for me, but for all of us and also for your family, sir.
Hey, it was my pleasure. Thank you once again.
You're so welcome. Y'all, happy Thanksgiving. Don't eat too much now. And if you do eat so much, please go run. Please go walk or do something. Just don't sit down and don't go to sleep while you finish just eating all that food, okay? Until next Wednesday and Thursday, take care, take charge, and continue to be great. Bye for now.
Thank you for listening to Women Emerge with Mellisa Lambert, where Mellisa speaks with leaders, experts, and motivators who share their journeys and their stories through personal and professional growth, knowledgeable tips, and lessons learned that will empower you to grow. Follow Mellisa and Women Emerge Network on Facebook, Instagram, and TikTok at MELLISA SLAMBERT and at Women Emerge Network, and visit www.womenemergenetwork.com. Remember, when you know better, you can do better, especially when God is for you.